So today we're gonna backtest the gold using the CRT plus ICT strategy. Okay, so we have the price is bullish in the higher time frame, that is the weekly time frame. We have those weekly fair value gaps there. The second fair value gap. Now we are expecting price to retrace to either fair value gaps and continue to being bullish since price is going up. We're gonna mark the liquidity, that is the external range liquidity. Now we head to the daily time frame to see what our price is doing. We plot that order block where we anticipate price to respect because price is bullish. There's a possible daily CRT that might happen. We are only anticipating. Let's mark the levels, the daily CRT high, the daily CRT low, the 50% level, which is also very crucial because that is where we will take our partial profits. Now we check for the 4-hour CRT for any possible price movements that we might take our entries from. There's a bearish fair value gap there which we shouldn't ignore because we anticipate price to hit that fair value gap, then head to the sell side liquidity to tap our weekly fair value gaps. And the 1-hour time frame, we are looking at the daily CRT, anticipating for a market structure shift for price to go up and respect that daily CRT. There is no confirmation entry for our daily CRT. No market structure shift, no change in state delivery. Now let's see where price will go. Still there's no confirmation entry. Now price touched the weekly fair value gap. Head to the daily time frame to see any possible daily CRT. There is no daily CRT. Now we anticipate the weekly CRT since there is no daily CRT. Price has taken out the previous week's low. Now we are anticipating a weekly CRT. We plot the levels, the weekly CRT low, the weekly CRT high. We head to the daily time frame to anticipate our daily CRT. Unfortunately, there's no daily CRT. Now we head to the 4-hour time frame because that is where we take our entries from. Now we anticipate for a market structure shift from the first fair value gap. We get the CISD, that is the change in state delivery. There is an inversion fair value gap where price might retrace to and then go up because initially it disrespected the bearish fair value gap. Now anticipating it to be bullish fair value inversion fair value gap. We plot the optimal trade entry where we need to take our entries from, that is the discount level. Never take trades from the premium level. Buying trades, that is. The first target is the 50% level, that is where we'll take our partial profits from. Then the last target is the external range liquidity or the equal highs up there, or the weekly CRT high in this case. Now we anticipate price to hit the weekly CRT high, if not to at least hit the 50% level. Now our entry has been triggered. Now we wait for bullish price action. we are anticipating a market structure shift from there to indicate bullish price action. There is a fair value gap there which we anticipate price to disrespect because we are in a bullish structure. Later it will become an inversion fair value gap. Price then respected that bullish fair value gap, meaning that price is ready to go up. It disrespected that bearish fair value gap, turning it into an inversion fair value gap. Now we anticipate price to retrace to the inversion fair value gap for another entry. There is a daily order block there which we anticipate price to hit either the inversion fair value gap or the order block or both. Now price has retraced to the inversion fair value gap. Price then went down because of that bearish fair value gap which we could have taken our trades from. There is a daily CRT there. But because price is bullish, we only need to take a bullish trades, not bearish trades. But you can take a short-term trade from that bearish fair value gap and target the inversion fair value gap at the bottom. Now we anticipate for a daily CRT to form there. We only trade CRT. Our only confirmation is the candle range theory. Now let's wait for price to take out the daily CRT low, a confirmation entry, so that we can buy again till the external range liquidity at the top or the weekly CRT high. We head to the 1 hour time frame for our entries because we are anticipating for a daily CRT. And the 1 hour is the entry for the daily time frame. Now let's wait for price to sweep that daily CRT low. There is a turtle body soup. The turtle body soup touched the order block. Now let's see if where price will go. There is a fair value gap there, a bearish fair value gap which anticipate price to break through and become an inversion fair value gap. Price then made another turtle body soup. Now we are expecting price to displace to the upside, indicating bullish price action, and then make a market structure shift so that we might take our buys from there. Price broke the structure to the upside. Now we're going to take our entries from the fair value gap plus the order block in the 1 hour time frame, targeting the daily CRT high and the external range liquidity. Remember always the first target is the 50% level. there is our weekly CRT. We head to the daily time frame to see what price is doing. The daily CRT is perfectly working. CRT is the best strategy you can find in any market. It is applicable to all markets, forex, indices, commodities, plus the ICT.